Welcome to NIBA TV. 2020 is going to be the year of legislative reform coming out of the Royal Commission recommendations and some other things that are happening in the federal government. So last week we put out a note to members about some of these reforms. We just want to give you a highlight on some of these matters because many of these will affect insurance brokers. You're going to have to think about sometimes you have to think about your business model. There's going to be a fair bit of training coming through. So what we'll do is, I'm here with our legal advisor, Mark Radford, and we're just going to give you a highlight of some of the things that we're looking at. A couple of these are already through the Parliament, but many of them we are still in heavy negotiation with Treasury to try and make things work in a sensible manner for insurance brokers and your clients. So we're just going to go through and we're going to go through in the order of commencement. Some of these things take effect 1 July, some take effect later on. One area which is already underway, or certainly the legislation is already in place, is this thing called design and distribution obligations. This is obligations on both insurance companies and brokers. So key points on design and distribution, Mark.
Okay, design and distribution, in a nutshell, retail clients in the insurance context, but it can go broader into asset type products as well, but retail clients only, which is kind of good news. It imposes an obligation on insurers to create a document called a target market determination, and the content of that document has a direct impact on brokers as distributors who have to comply with certain reporting and other obligations there and act consistently with the TMD. So it's a big change. Focus on making sure products are appropriate and provide value. There are some personal advice exemptions for brokers that NIBA negotiated. NIBA's liaising with the ICA and insurers to attempt to kind of work through their approaches to try and smooth it as much as possible for brokers. At the end of the day, though, you have to liaise with insurers once they work out their approach.
So once we get a clear understanding with the insurers, with the ICA, it's going to be important in the second half of this year. I think all brokers are going to have to do some decent training on this stuff. It will affect pretty well everybody and what they're doing. So it's going to be important to pay attention to that one. Claims as a financial service is a recommendation came out of the Royal Commission. It's actually driving us crazy in some of our meetings with Treasury at the moment. So it's brokers acting for insurers with claims handling, or brokers acting for clients. So how does it work?
So brokers acting for clients won't be caught in that activity. If a broker were acting as agent of an insurer in a claims handling or settling activity, they can be caught. The key, it applies to retail and wholesale client business, is important to know. And the basic end result is anyone providing a claims handling or settlement service within certain classes that they're yet to properly define will have to get a license or act as an authorised rep of a licensee. And then other people not in that license category will still have certain general obligations when they're acting for a licensee in claims handling and settling services. So it'll have a big impact on those involved in claims handling and settling, which are currently exempt from being a financial service under the Act.
So that's going to be an important one, and that'll have an impact on the license. So people have to think about that. We'll put out some information to help you go through that process and make some decisions on that. There's a funny Royal Commission recommendation about disclosing your lack of independence. I'm not quite sure. It didn't apply to insurance, didn't come from insurance broking, but it's going to catch insurance brokers.
Yeah, so under the Act, basically, there's a prohibition that says you can't use the term independence effectively if you get a commission. So obviously brokers at the moment can't refer to themselves as being independent. What the Royal Commission recommended was that people should be made aware where a person's not acting in an independent capacity. So it's putting a positive obligation on licensees, and that can catch brokers, to disclose in their FSGs why they can't use the term independent. So that's one we're actually talking with Treasury on, but that'll mean a change to your FSGs.
Yeah, so we'll give some guidance on that once it's all finalised. A lot of these things we're still negotiating, we're still talking, but we just these are things people are going to have to start thinking about. Yeah. So yeah, the big one that we're looking at the moment is hawking. The Royal Commission said the Royal Commission had evidence of lots of people flogging rubbish, right? So he said, well, we have to get rid of people hawking financial products. Now, this is going to have an impact on insurance broking and the relationship you have with your clients. It also has a potential impact on the marketing of your business and your services. So we're really concerned about some of the approaches, the way the early draft of the legislation, we're working on it, we're negotiating with Treasury, but I think it's got to be a bit easy for personal advice, but a bit more complicated for general advice. Is that right?
Exactly right. Yeah. So the telephone hawking exemption is dead under this new regime, and they've created a new definition of unsolicited conduct. So it's all broader than what it was before. There's a limited kind of personal advice carve out, so brokers are going to have to consider it in the same way anyone else would when they make contact with a customer. And it'll also link up with these new add-on insurance proposals that Dallas will talk about.
Another one that's coming this year is a new power for ASIC to be able to give directions. If they think an AFS licence holder is breaching their obligations, breaching their licence obligations, or breaching the law, they're going to be able to go in and start giving directions to stop doing things, to make you do things. It's a very broad power. So have you got any concerns about that one?
As Dallas said, it's a massively broad power. It's where they suspect something. So, there's nothing much to say other than ASIC can pretty much do what it wants, and we hope that they'll act responsibly.
And that backs up a lot of penalties that came in last year. So people need to be aware there are very significant penalties for breaches of the Corps Act now, both civil penalties and criminal penalties.
Yeah.
And then you've got ASIC powers to come in. You've also got ASIC product intervention powers. So the whole ASIC power or authority and regulatory power is now far greater than what it was 12 months ago. So people need to be aware of that.
The biggest concern is they go in hard and fast without truly understanding, what they're doing. Hopefully, it's only going to be in really significant consumer detriment scenarios, which is what everyone's saying. So we'll just have to wait and see.
So related to that whole regulatory thing is breach reporting. So brokers already have obligations to report breaches of the law or breaches of conditions, but that's going to be expanded. So are there any key highlights on this one?
Basically, breach reporting as we currently know it is going to change significantly. So in effect, where you become aware of something that could become a breach, you're going to go through a whole new process of reporting. So that'll be change to your compliance procedures in relation to breach reporting, which is a big impact.
One of the things that we're really struggling with in our conversations with ASIC and with the insurers is what's a complaint, what's a dispute, what's a breach. What are the sort of things that actually will trigger some of these other procedures that the compliance people are going to have to get their head around, and ultimately the business is going to have to have procedures and reporting procedures, and also recording procedures, because a lot of these things you're going to have to make records of what's happened. So our goal in the next little while, once this thing is finalised, our goal will be to give as best guidance as we can on what's a breach and what has to be reported. So we want to do that.
And ASIC's currently reviewing what a complaint is and the data that they're going to require from licensees in relation to complaints. So they've put a bit of that on hold for now because what they proposed was impractical. So that's an ongoing discussion.
So again, coming down the track next year, another Royal Commission recommendation is slight changes to the rules of misrepresentation when a client or a policyholder gives the wrong information or not enough information when they're taking out a policy. New duties to take reasonable care. So it'll be a slightly different approach to the Insurance Contracts Act obligations. Anything there on a...
Yeah, so they're copying the UK model. And I guess from a broker perspective, it makes it harder for your client to breach their duty of disclosure. So no change on the broker's obligations relevant to duty of disclosure. You'll just have to explain to your clients the new duty, and then the new rules will come into play. There are some technical issues that insurers are looking at, but generally for brokers, that's good news.
Fantastic, and good for clients. The other really hard one that we're looking at the moment, and we've been in deep discussion in Treasury for the last 3 weeks, is this add-on insurance thing. So Royal Commission looked at add-on insurance in motor dealers, they looked at consumer credit stuff, and they said, oh, this is really bad, so we should ban all add-on insurance. And so we've actually told Treasury, do you realise that there's a whole bunch of areas where people buy a product and an insurance gets tagged along? The classic example, of course, you get a credit card, there is an insurance coverage as part of your credit card. That is add-on insurance.
Yeah.
And so the current proposal is to ban virtually all add-on insurance. So if your kid plays sport on Saturday morning, you join the sporting club, you get insurance cover as part of your registration. This is add-on insurance. So it's really challenging as to how this whole thing is going to work. We're really worried about it. We've got furious conversations happening with Treasury at the moment about this. We think it's going far too broad and unnecessarily so.
So the ban is interesting because add-on insurance is add-on insurance is a consumer as defined under the Corps Act. Anti-hawking, which works kind of in an associated manner, is a retail client under the Corps Act. And add-on, if it's add-on insurance, which is insurance sold in conjunction with a primary product or service, and the insurance relates to a risk associated with the primary product and service, there's in effect a deferral period of 4 clear days that applies before you're allowed to sell it, and certain ASIC prescribed info has to be provided. It is so complex. Even Treasury was struggling with their own proposals.
If your kid wants to play sport on Saturday, you go down and you sign up for the sporting association, but you've got to go back the next weekend and do the insurance part of it.
So government's taking the gamble that people who are not allowed to buy the insurance at the time, say they buy a pet or otherwise, basically won't suffer a loss between the time and the end of the deferral period. That's basically what the government's done. So there's a lot of discussion still on that, I'd say.
The disappointing part for me was that the motor dealer stuff had already been fixed.
Yeah. It
had already been fixed. So why are we still doing this? I don't know. Anyway, this is yet another recommendation that we're looking at. The last one I wanted to mention is, again, this one is already law, but it hasn't taken effect yet, is unfair contract terms. So this is actually a good thing for clients and for policyholders. It's possibly a bad thing for insurance companies, and we were worried about that. But this takes effect in April next year. What's the key element of unfair contract terms, Mark?
So insurance is currently excluded from unfair contracts, and this will bring it in. So the net effect is insurers have to go through all their policy wordings and, in effect, review them to see if they contain unfair terms. They lost the battle politically in terms of various exemptions, so most terms are exposed. And they're going to have to go through a massive review process. It can, it can affect pricing. There's a whole lot of unknowns, unfortunately. For consumers, it makes it easier to, win a battle over a claim, I would say. Yeah. So that's good news. But there's a price impact, I think, is the end result.
So there's a lot on. There's a lot of recommendations coming through now. The government is desperately keen to get this legislation into Parliament in the next couple of months because they want to be able to show they're implementing Royal Commission recommendations. The content and the detail, there's quite a lot of areas where we're just worried about it. We're in furious conversation with Treasury at the moment to try and get this to make sense as best we can. But the key point we wanted to take out, there's a whole bunch of stuff happening. We're going to start, as each of these are dealt with, we will start producing information for our members to explain what it is, explain what the impacts are, and some of the decisions that you may well have to make in terms of the operation of your business and the things that your compliance people are going to have to know and understand. So there's a note that went out to members that gives a bit more information on all of this. We'll keep the information coming. Unfortunately, this is going to divert you from some of the things you want to do with your clients over the next 12 months, but we're just going to have to do it. We'll do our best to make it as simple as we can. Good luck with it all, and we'll keep you posted during the course of the year. Thanks very much.